Hello, I'm John Kicklighter, Global Head of Content at StoneX, here with a short and hopefully useful video on risk appetite. Risk appetite is also referred to as sentiment or risk on, risk off, but what it generally reflects is the collective conviction of the markets on its appetite for yield at the expense of risk. Now, this can often see swings in markets of great amplitude, and it can also feed into trends, either bullish or bearish. But there are a few things that we should know about sentiment, which I have here on this chart. On the bottom end of the spectrum, you see the directionality of that sentiment. Risk on to the right, meaning people will pursue things of greater return at the expense of those risks. And on the left is risk off. Now, the more aggressive that risk on or risk off, the more impactful it is in the market. When you're near balance and there is only a moderate swing towards risk appetite or risk aversion, it doesn't usually have a lot of momentum. And it will also see a market that is not as robust at abiding and moving over key event risk. Sentiment will take it very seriously and it can change the direction of the markets. Now, the more intense we get, the more it will impact a broader set of assets. I have here a severity or intensity measure of risk trends moving up the scale of what kind of markets it can actually impact. And it's always good to know what kind of markets we have to deal with. On the risk appealing asset side of things, we have things like Bitcoin or global equities or emerging markets. On the opposite end of the spectrum, when people are fearful, they seek out safe havens, and those can include the likes of treasuries or the dollar or the Japanese yen, gold. And it's important to recognize not just the direction of sentiment, but the markets that are preferred depending on which direction we are heading. Now, when we look for a clear reading on sentiment, very important is to look for not just one benchmark. Oftentimes we reference something like the S&P 500, which can be convenient. But I like to look at a collection of markets that can be collectively viewed as risk sensitive. And when they align in terms of direction and intensity, I find that to be a lot better reading on sentiment. Hopefully this was useful, and good luck trading.